Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Phil Mackintosh, Nasdaq's chief economist. We're going to discuss what happens when the music stops with stimulus and unemployment benefits. Phil, it's great to see you in studio back home.
In person.
It is. It's great to be back in person. And let's start with where we are with COVID cases and economic data. We have the fourth wave here happening in the U.S., of course. We haven't really started school yet. We have the flu and cold seasons coming up. Are you starting to see any of this trickle down into the data?
So on the economic data, yes, we're starting to see a lot of the PMI, the manufacturing indexes are starting to tail off. Some of the reservations for restaurants are starting to tail off. But on the market side, not at all. We're hovering back at all-time highs. And it's kind of, it seems incongruent, doesn't it? That we've got what looks like a slowdown in the economy here. Definitely in Asia, same thing. They've got shutdowns and quarantines because they're a lot less vaccinated. But markets are pretty close to all-time highs.
Yeah, and if we look at our first couple of slides here, we can see just that divergence between us and Europe and Asia and so forth. Anything of note there?
I mean, you can see when you look at Europe, which is also at all-time highs, it hasn't really kept track with where the US markets have got to. And I think that's partly because of the amount of stimulus that we've put into the American system versus the amount of stimulus that's in Europe. Europe on the vaccination side has completely come past us. They're much better vaccinated now than we are. But really, I think what we're seeing in the stock market is people are looking through the COVID. I think we've learned to live with it, and we've got global companies, and so really it's about how the global economy is going, not about how local COVID cases are going.
And what's so interesting is on our next slide here with these couple of charts, we can see how the markets have performed, how the consumer is performing. So really, what's behind this?
I mean, you see the impact of the stimulus. Right. You see the huge amount of stimulus that the US government's put into the US economy compared to the European stimulus. I mean, everyone's put a lot of stimulus in as a percentage of GDP, but we are far and above what Europe's done. And so even though they've been better at vaccinations, better at keeping their economy kind of boiling, when we've gone through, to your point, wave after wave of shutting down, lots of hospitalizations, lots of illness, the economies themselves of kind of Europe's chugged along and ours is running red hot. And you can see when you look at things like the retail spending data, every time the stimulus checks were sent out, retail spending got a boost and it got another boost. And right now we've started to see the savings rates are starting to come back down to normal because we haven't had a stimulus check for about 6 months. And we're starting to see a lot of the other numbers get back to normal. Unemployment, new claims, sort of back to normal numbers. And I think we're starting to get back to a, I guess, more normal data regime as well.
So when we think about it, stimulus checks are done, unemployment benefits are starting to run out. The music's going to stop at some point, right? So we had this period where we had the Fed buying bonds. We had fiscal stimulus at the same time. And, to have both of those converge together is kind of a big deal and why the U.S. stock market's been doing so well. What happens when the music stops? Do you think it'll impact retail participation or trends or the consumer at all?
Really interesting question. There was some data that came out recently I saw which looked at the net buying of retail in the stock market. And typically retail is a slight net buyer, but sometimes not. When you saw we got to COVID, all of the stimulus checks, to your point, the fact that we were sitting at home without hotels to pay for or vacations to pay for, buying groceries instead of restaurant food, you saw a huge net increase in buying from retail, and that's persisted. So with all of the excess savings that were created by what COVID has created, we've seen net buying in the stock market by retail investors. It's a really interesting question. When we all get back to work and when we don't have these stimulus checks, will we see a sort of normalization of the retail investment in the stock market? Will that reduction in net demand be a bit of a headwind to the stock market as well? We don't know for sure, but it's great that we've seen a broadening of the base of investors in the stock market. We've got a lot more young retail people in stocks now than we did 2 years ago. So net, it's been a great thing for that part of the US household sector, for people to get invested in stocks, for the companies to have a broader base of investors. But we could see, with the lower stimulus going forward, a bit less net demand.
All right, Phil. Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.